the Elite Trades Conference Trades Open Day. We're very happy to be here and hosting this live trading environment this morning here on the 26th of April 2017. As Simon said, it's 7:33 a.m. here in the UK, and we're looking at the market open currently, ready to go with some potential opportunities. So it looks like things are panning out in an interesting way this morning. We should have some trade opportunities from what I can see here. So let's be involved in terms of being vigilant. We're going to start to analyze the euro-dollar market, and the first thing we normally do, as you know, is draw on our key price levels across the market. So that's the first thing I'm going to kick off with. We're going to make our map for the morning to give us an idea of where currency can move to, the fluctuations, the small fluctuations that we're looking for. So let's kick that all off. I'll do that on the euro-US dollar first of all, and then I'll hand over to Tiru, who will do that on the pound US dollar, and then we'll analyze any potential setups that there are this morning. And obviously we're looking to place trades at 8 a.m. As we have done over the last couple of days. So that's the time window that we have. So we're 25 minutes out from that point. Let's switch it straight over to my euro-dollar profile to go ahead and start putting things together by way of the price map. Let's start by looking, as I say, at the euro-US dollar 1 hour chart. Let's start by looking at a slightly higher time frame. We'll look at the daily to gauge an understanding of where that finished yesterday, and then we can then drill down to the 1 hour. So you can see that yesterday the price has finished much higher than the open. That's got a lot of momentum in that move just up there. Now, the thing to bear in mind here, of course, is that because we've closed above this key range just here, because we've closed above the mid-range of this particular bar, there is a 68.2% chance we're going to see, first of all, a break of the high of the previous bar. Now, that's already happened this morning. So you can see that the high of yesterday, 109.49, the high of today, this morning so far, 109.49.9. So by 9 micro pips, it's almost a full pip. We've broken the high just there, and that's an important level to note. Now, let's drill down. Let's make a note, first of all, actually, of the ATR, because that's going to help us to plan out our map. So the ATR yesterday here on the euro-US dollar was 79. The ATR 10 just there. I've made a note of that. What I want to do now, switch over to a 1 hour chart to begin an analysis of this one and draw our price map out according to the price route probabilities we're looking for. Let's go ahead. Just going to pull open my journal. Bear with me just one moment while we do that. I'll go ahead and get the journal opened up, and then we will go ahead and start to populate some opportunities just here. So there we go. Right, so today, 26th of April 2017, should potentially, okay, the ATR 10, as I already said, is 79, which means that you've got a 55 pip ATR 0.7, and you've got a 63 pip ATR 0.8. Let's minimize this now. We can draw the ATRs on straight away. So really, from the high here, you've got 1.0950, I'm going to call it 10950. Take away 55 from that. It's going to give us the 0.7 ATR, 108.95. Okay, so 108.95. Let's change this. Now remember, we're using the 0.7 and 0.8 ATR because according to our research, that's generally the that's generally where 80% of the bars will actually form their range to. So it's important that we know where these levels are. So let's go ahead and draw in the 0.8 as well, 10950. Take away 63, so that's 10887 this time, so 10887. So we've got the ATR there to the downside. What I'm going to do is just move the other lines out of the way just a little bit. There we go. So you've got 0.7 ATR there. You've got the 0.8 ATR just here. Okay, let's draw the same thing and let's draw that to the upside. Now you can see that the lowest point of the range so far from midnight through till now is this bar just here. And as a result of that, I'm going to draw my ATR because think about it, ATR is range from high to low. I'm going to draw my range. I'm going to draw my ATR 0.7 and 0.8 from the low of this bar here at midnight. The low is 10922. I'm going to add this time 55 pips, 10977. That's going to take us to the 0.7 level, just there. Feel free to punch in questions. Questions will be answered at the relevant time. If you put that in, I'll have no problem whatsoever by way of answering questions, but I'll just do it at the appropriate time. So bear that in mind if you have anything that comes up that you'd like to clarify. Let's just go ahead and change this level here. So 10977. Okay, good. Let's go ahead and key that in. Squeeze this a little bit to make it just a little clearer. There we go. Fantastic. And then the final level, of course, is the 0.8 ATR. So from the low, 10922 plus 63. 10985 is the ATR 0.8 to the upside. It's there. Fantastic. Good. Let's now go ahead and just key in the previous day's high, which will be this point just here, I believe. Yep, 10949. Remember, this has already been broken this morning, so 0949. That's previous day's high. Let's go ahead and put in the previous day's low, which is this point just here, 10850. Take away anything actually. That's the previous day's low is the previous day's low, 10850. There we go. Let's just move some of these other lines out of the way, make that nice and clear. Okay. Okay, fantastic. And let's go ahead and draw in. Let's go ahead and draw in the next key level, which is the range between now and midnight. So we're looking at this. Low is 10922. Just there. And you've got the highest point of the range here, 10950, which is going to match up with the previous day's high, pretty much. 10950. Okay, fantastic. Good. So you can see that you do have a little bit of selling pressure kicking into the market here, which is positive. I'm also aware of this gap as well that's formed over the weekend, and the fact that these pairs will be obliged or want to close that gap at some stage. It may not necessarily be today, but I imagine that that's going to want to happen rather soon. Let's go ahead and draw in the stretch values as well. So remember, I'm going for 2 times the stretch. The stretch today is 12 pips. I can see just here from that calculation, so I'm going to multiply that by 2, 24 plus the open, which is 10928. Okay, 10952. Let's have a look at where that is in relation to current price. Right, that's quite interesting because the high was 10950. Okay, so you can see that pretty much we are very close to hitting 2 times stretch this morning. Just here, it hasn't quite happened yet. Okay, and let's look at 2 times stretch on the downside. So open 28 being the open, 10928 take away the 24, 10904 stretch downside. So 10904. That's the stretch to the downside. Okay, good. Okay, very interesting. So Now, if we'd plot out we've got 24 pips just there. Okay, it's looking quite interesting. Okay, good. Let's analyze up as well where the midpoint of yesterday is. So 108.50, take away the high, which is 109.49. 99 pip range yesterday. So divided by 2, obviously 49.5. I'll just take 50. And we'll just add that to the low, which is 10900 exactly. So let's keep that in. That's the midpoint of yesterday. Okay, and so range. Okay, that pretty much tidies up our price map on this Euro US dollar for this morning. So if we do take a move downside, then we're going to want to take this to potentially this 0.8 level just here, 43 pips from where we are now. Let's just keep a lookout for this, and we'll make a decision on this very shortly. And in the meantime, what I'll do is I'll pass over to Tiru, who will want to look at the pound dollar with all of you as well. So we'll just take a short couple of minutes before we go ahead and do that at this time. We'll go ahead and do that. We'll just take a couple of minutes before we do that. So I'm just going to drop my screen share for a couple of seconds, put myself on mute. As soon as we've got that space, we're going to analyze the pound against the US dollar, and then we will look to place any potential opportunities this morning.
Okay, hello and a very, very awesome morning to everyone here in the Round the Clock live trading week by Master Markets. Still Nagpan here, founder of Master Markets, Elite Trades Conference and the Traders Open Day. Right, traders, so today is our final day on the live trading week. So we are looking into the pound against the dollar. We're drawing our price map. The price map, traders, is very, very important. Very, very important. Very quickly, just to remember, just before carrying on, just if you all can see my screen okay and hear me okay, just type in yes to the chat box. Okay, so a few of you guys all typing in yes. Okay, great, brilliant, awesome. So let's move on. Right. So now what I have at the moment is what we call the price map. Now the price map, as I mentioned yesterday, is dependent on two bases, is it not? It's based on our concept of our strategy, and the next thing is based on the objective, what we want to reach. So based on that, we then formulate these levels to reach our objective and to match and align with the concept of the strategy. The concept of the strategy, traders, is what gives you the conviction to keep moving forward. The reason is, if the concept is strong, then the only reason you probably won't be making money is because of the mix and match of your parameters and your statistical validation behind it. Or probably, and of course, if you don't know how to do any of that, then there is a big gap in knowledge. Okay, and that's when you know you need to improve that, and you need to hang around the right people. In terms of the concept of this strategy, all we are looking to capture is a certain part of the range of the bar, of the daily bar, basically. So in a day, how much does, on average, does that bar move on this particular instrument? High minus low basically is what we're looking for. If you want to find the average, you can use the ATR indicator. And once you have found that, then basically what you're saying is you're finding out the average. That's what I was just said, XATR 10. And once you have found that, if that instrument has already moved that amount, then you do not trade it. Or if it hasn't, if it still has got some leeway to move, then you would then take that that gap in pips towards that target. Okay, you put that as a target. All right. As I already said yesterday, I think there's no point in keep on asking us the same questions again and again. We don't use any indicators at all price, traders. All absolutely price. Yesterday there wasn't a trade at all. There wasn't a trade at all. Are you talking about the end of day trade? Or okay, I think that will be covered later on. I believe that was actually cancelled, actually, Tangawila. But anyway, I'll take on the questions later on. Let me just do the analysis because I'm just aware of time. It's going to be 8 o'clock very soon. So what do we have at the moment? So what are we drawing here on the price map? Rishi has already gone through most of it. I'll just go through it again as a recap. We have our PDL and our PDH, which is the previous day high, previous day low. They are very critical points that you got to look at, because entry levels of millions and millions of traders are over there. Another thing also that you must do understand is, because we're looking to capture the range of the day, as you can see from the daily, right? So from yesterday's bar, we're looking to capture, let's say this bar average for the last 10 days of 100 pips. I'm looking to capture at least 0.8 of that. So 80 pips of that range at least, understand? So that's what we are looking to do in terms of that. So that's why I've got all marked out, all the 0.8 and 0.7 levels as well. Okay, so we've got all of that here. And I've got my two ranges for the morning. As you can see, this is dipping much more further down, as you can see. Then the next thing is, what else am I looking for? Let's see. I've got my 0.7 and 0.8 towards the downside as well. I'm just going to adjust that very quickly here. So let's see, 72 for today is what we have. Let me just quickly do the downside and the upside. 72 is what we have. 12882, 12882 is what we have. Okay, brilliant. So we got that one here. The next one, what we need is the 82 point, right? So I'll just quickly do from the low of this, a projectile 82, that be the range, 0.8 ATR, 128.92, 128.92 is what we have. Okay, so I've done that as well. Now on the downside, we'll do the same thing again. Okay, so we'll do the on the downside, we'll do the same thing again. So 72 will be all the way here. One two triple seven zero. Okay. Yep, there we go. We got that one there. And what else? And then we have 70. I see already 72 here, right? So then 72, then we got 82. So we got 82 pips from the highest part of, as of now, of the bar, 12760. 12760. 12760. Okay, great. And then the stretch from what we have calculated, 12781. Great, okay. The part there. And then from here, 51. And the level of that stretch, 1. Okay, good. So we got that now. Brilliant. Okay, right. At this moment, I've got my whole price map all done. I've got my ranges. Let me just show you all and make you all understand what we've done here. I've got my ranges as of now up to 8 a.m. Going to be 8 a.m. soon. So I've got all my ranges in. The next thing, what I've also got, I've got my stretch levels. Okay, the stretch level on the daily bars is what's basically the open to the nearest extreme. We've explained this before. Rishi has already explained that to you. So that's what the next thing we have on both sides. Then we got our previous daily low and our previous daily high, and then we got our 0.7 and 0.8 levels. And not only that, I also have my 1 hour and 4 hour swing high levels as well. Okay, and they are much more further down below. Okay, so even if you look at the 4 hour, you can see all my smart money indicator all coming in, measuring in the swing high and swing low levels. All this is not swing high, swing low levels inside here. Okay, right. Now, I can't stress to you the importance. Probably it'll be very difficult for you to understand the value of the smart money indicator. It is so important. Okay, without the swing high levels being quantified, you will be so subjective and you won't be able to design strategies that can be scalable and reproducible. Very important. I will highly suggest for those of you guys who are very serious, you know what, just get the smart money indicator plus. If you want to know how to use it and model it around your strategy that you're doing right now, and then just book some coaching sessions with us. I think that's what I highly recommend if you want to really progress with it, because we do know absolutely what we're doing over here. You will not have seen anything like this in terms of just price alone. We don't use any ADX, we don't use any RSI, we don't use any CCI. What for? If you know how to read price, you just use price alone. The issue is most people don't know how to read price, and you don't come across the right people. Okay, that's what it is. Right, now, so we got all those levels, the 1 hour and the 4 hour and all that, swing high, swing low levels. We got all this as well. Today, our red line, our critical level, what I'm looking at, 2807, 2856. Now, if it crosses past those levels, I've got a very high probability of it going to the upside, and if it goes down, this level is very high probability of going to the downside. Now, traders, very critical information I'm going to give you right now. Very critical information I'm going to give you right now. You see, when I'm talking about this red line and yellow line, when I say a probability to the upside or to the downside, I do not mean finally, in the end of the day, the bar is going to close at the top. No, or higher. I don't mean that at all. In fact, forget about the close. Traders, forget about the close. In this particular strategy, which puts the probability and the edge to your side, we are not playing the close. We are not playing the close. We're just playing the range of the bar. When I say to the upside, high probability upside or high probability downside, all I mean is that it's going to form its range towards the upside from the bottom up. That's all. So the first way it's going to form its range is towards the upside. So if this thing starts to turn and starts to move up, it will form its range. That's what I mean. There's the highest probability of forming it to the upside. After that, if it then comes down or goes above and closes below a high test bar, I don't care about all of that. Okay, but if it crosses into this point here, then this will become the high, and then it will form its range to the downside. Okay, its range to the downside. So from high to from what we say, is it up to down day, or is it a down to up day? So how is it going to form its range? So there's two ways it can form its range, right? So from up to down. So from here, you see, from up to down, or from low to up. Okay, this is what we mean. Understand? Right. Great. Brilliant. So I think I've done my analysis. So for today, our bias, you see yesterday, what did I say? When it crossed above the red line, it will form its range to the upside from low to up, right? Look what happened. It did it not? But I also told you all that it's on a high probability basis as well. Is it right? So you've seen that. You'll see that again today if you don't believe me. But on a high probability, do remember that. These levels are all brought by mathematical algorithms formulas and based on price alone. Only price alone. Okay, so today, based on yesterday's bias for today is up. Good. So based on that, I'm going to place a trade, an entry order for the high of this bar, Okay, that's what I'm going to be doing right now. So let me give you all the entry levels then. So the entry levels right now, let me see. Okay, good. So long bias up for cable, entry. So long. So our entry is what at the moment? Our entry is going to be for the high of this bar here. So now the high, 128.37, 128.42, 128, 28.38, 28.43. I'm going to put it. And our stop loss is going to be at the low of this bar, 128.09. And the target is going to be what we had just mentioned over here. So to be accurate, 128.11 plus 82, 128.93. Okay. Brilliant. So I've sent that all to you so you can see all those levels. Also do remember that this is also basically a stops to cash strategy. Remember I told you about this? You see, good sell-off, very straight sell-off, right? And then we put an entry order for the last bar on the 7 a.m. 1 hour bar, or you can wait for a 1 hour bar that closes above the mid-range before you place your order. Okay. The different pattern setups you can look at as well. I mentioned to you a few, so look at them before you do your analysis and place your trades. Okay, great. I believe I'll put myself on mute for the moment. You are going to digest what I've told you, place the price map, look to understand what I've done at the moment, and then we'll resume shortly in 8:15 after having a tea break. Okay, good.
Okay, welcome back this morning here on the 26th of April 2017. We are going to continue on with our agenda this morning. I'm going to continue to monitor the euro US dollar. I've already said, someone's asked me a question in regards to potential trade opportunity. The answer at this point is no. However, there is a higher probability it's going to form its range to the upside based on our calculations and based on probability. So I will be looking to take it up to this point just here. These levels are changing now slightly because this low has now been reformed, but we're looking to go up to potentially these levels. Now, for me to do that, I need a little reversal pattern here in the market. So once I get that, then we'll look to place a trade long. Other than that, nothing for me to do right now. Let's review that again at 9 a.m. At this stage, what I want to do is just refer across to the agenda for the parts of the content that we're delivering this morning here on the 26th of April 2015, it's last day of the live trading week. So far we've been through the dynamic breakout strategy on day one. Yesterday I went through the 80% RB trade setup and the V1 patterns, and then we explained in a nutshell how that was actually setting up. For those of you joining us in the end of day trading room, you'll have seen over the last 2 days we haven't actually had an 80% RB trade setup. Now, I'm just looking currently at the market, the way that it's forming today. There is a possibility, although I believe it's lower, but there is a possibility that there could be an 80% RB set up tonight on the Euro US dollar, potentially on the Euro Japanese yen as well, and also potentially on the dollar Japanese yen. So we just need to keep a lookout for those ones into the rest of the day. If these reverse and certain criteria are met, as I said, we've grouped together 11 key parameters that we need to look for in that particular strategy. If those are all met this evening, then we will actually take the trades live in the trading room, and we'll go ahead and place those opportunities. But again, they need to meet, out of the 11 criteria, they need to meet the 4 that we've identified as high probability criteria. We class those as type 3, 80% RB trade setups. Okay, good. I'm just going to, as I said, refer back to the agenda just here. So this morning, we just wanted to refer. Thierry was going to go over strategy optimization. We've already kicked off a live trading session this morning as well. We'll also go over the trade journal and the Q&A as well. And of course, the trade journal is a part of the Traders Essentials kit. Now, the trade journal that we're using specifically inside the Traders Essentials kit is one that I'm going to show you just here, because that piece of technology is superb. It's our premium, it's our own personal IP here at Master of the Markets. We've designed that whole trade journal from scratch, and what it allows you to do is it allows you to do a lot of the calculations automatically. So this is what's really important, because you want to be able to keep accurate logs of the trades that you're taking. And what I want to do is I want to show you very quickly here actually what the Traders Essentials kit actually contains. So you can just have a strong understanding of that, and then you can have a look to see if that's something that's going to fit your trading objectives. So let me go ahead and pull that open for you. We're going to, yes, we're just going to do a little demo on what that journal looks like. So let's have a quick look here. Great. Perfect. Good. So here on my screen share, you should be able to see an Excel spreadsheet. Now this is our trade journal template, and this is something Thierry will be going over in more detail than I'm going to be brushing over it this morning. But certainly in that section where Thierry talks about strategy optimization and trade journal, you'll understand a lot of the numbers that we're looking to track and what they really mean. And this is what's important. So you do need to get a copy of that Traders Essentials kit. I would strongly recommend that for anyone that's looking to take trading seriously. Here you can see under the Trade Journal performance, it automatically adds up for you based on your strategy's performance, based on you filling out the journal with these key columns. It will automatically populate for you how your strategy is performing and the key numbers you need to analyze as well. All that's going to do is lead to understanding your trading strategy and how to upgrade its performance and upside and profit, that you can actually put net bottom line in your pocket at the end of your month. So if you can track everything correctly in the Master the Markets methodology, everything is tracked perfectly. You've seen that across our journals and across our results that we've got. This is the essential piece of kit. So this trade journal template is absolutely superb, and it makes up one of the 7 tools that's contained within the Traders Essentials kit. So some people are asking me just here for the Traders Essentials kit, for the address. I'll show that to you just here. So this is actually the website for the Traders Essentials kit. So you can see just here that you have 7 trading tools. You can watch this short video, actually explain everything in detail. But in a nutshell, you've got all of the essentials on how to gain a winning edge, the mechanics of how to place orders, 3 trading strategies which we've actually put into that Trade Essentials kit that you can use on any market, especially the lift-off strategy, because that's cross-applicable across any market. The crib sheet template is already in there as well, and so you've got a template in which you can populate your consistent parameters to log how a structured crib sheet should be. We've got a template in there for you. There's also an explanatory video in there for you as well with the crib sheet template. It will teach you how to populate it to the trade journal template that I showed you and a psychology audio program. And there you go. You can click onto the website. The Trade Essentials kit is just £97 plus VAT with free shipping to any country in the world. So regardless of where you are, you can get access to that. That's the address for it. If you click onto that and just click onto this blue button here, says take the next step, you will be able to just put in your details there, and it will be shipped out to you from our distribution warehouse within a day. You'll receive it within 1 to 2 days, depending on where you are. Obviously, in the UK, other parts of the world will vary in terms of timelines, but no doubt that they'll send that out for you in a speedy way. So, good. That just leaves me back to my agenda. I'm going to be looking to play some live opportunities this morning. I'm looking for the Euro US dollar, set up a little reversal pattern here for us, which it's not doing at the moment. We're just looking for this bar to close above the 50% range just there. We could take a little reversal. Let's see if we can get that into the later part of this bar in the next 35 minutes. Profit expansion trade strategy is what I'm going to be going over this morning. This is a trade strategy which we designed all around insider bars. I'm going to show you the research that we've done on that so far. It is a continual upgrade process, actually, of that profit expansion up until we finish up the final set of strategy parameters. But I'll show you what we've put together so far as well on that little strategy just there. And I'll be happy to take Q&A as well. So I'm going to cover this section first, and then, of course, I'll hand over to Thiru, who will be monitoring his live opportunities that he's placed, as well as taking you through strategy optimization, trade journal Q&A. So let me go ahead and pull open my presentation on the profit expansion. So do bear with me just a couple of seconds while I do that. In the meantime, I'm just looking at the questions box. Can you provide the Excel file? Yes, the Excel file absolutely is a part of the traders. Someone was asking me if I could provide the Excel trade journal template. It's all on the Traders Essentials kit. So absolutely everything is on there as well, and I'll give you some more information about that a little later. So you pick up one of those Traders Essentials kits, you can pick up as well that Excel template as well. The Traders Essentials kit address, I've already provided that for you in the chat box. you know the time frame you mentioned. Someone's saying to me, you know the time frame you mentioned yesterday of placing these trades before 8 a.m. for these two currency pairs. Is it the same for other currency pairs? Absolutely yes, but what I would strongly advise is that although the concepts will stand, you need to test to see how a strategy will perform across different markets. So if you're trading different currencies in different markets, the concepts will stand. We'll see volume coming in at 8 a.m. But you need to test to see how things will work on those particular currencies. For example, the dollar, Japanese yen, or any yen-related pairs generally have their moves much earlier in the day. And so the majority of their range is actually already formed even before 8 a.m. So if the majority of their range is formed before 8 a.m., so you can see even this morning here on the dollar, Japanese yen, it's already done a 57 pip range. Why would you then continue to trade it at 8 a.m. unless you had a different objective, which was not to capture the range? So again, it depends on your objective is the answer to the question. What your objective is will depend. But according to this MG 4.0 trade strategy, we're looking to capture range. And for us, for example, yen-related pairs would be no good because they've done the bulk of their range already before 8 a.m. Any other questions that I'm just looking through just here? Okay, I'm just looking at relevant questions. Is there a link for yesterday's session? Someone has put up on the chat. I believe Simon has provided a recording of yesterday's link. Absolutely no problem whatsoever there. Just checking through the other questions. Someone says to me, yeah, okay, so okay, so we're just having a look. I'm just looking through the questions at this time. Of all the strategies out there, which one has the highest probability of winning? Please show us how to trade according to the strategy. Right, okay. It's not necessarily about the highest probability of winning. There is a combination of factors that's going to make a profitable strategy. Your reliability is not necessarily the only factor that you want to look at. So bear that in mind. And we are placing live trades on strategies, 80% RB and the Morning Glory 3.0. So that's happening in this live trading week, and we are actually showing you the trades that we're placing. So I hope that answers that question. Okay, doesn't look like anything else that's relevant and pertinent to the group at this stage, so that allows me to carry on with my presentation on the profit expansion. Let me just switch over to that just there, and we're on the live trading week. Fantastic. Okay, so you should all be able to see my screen at this stage and just be able to see the presentation. What I'm going to do is I'm going to put my NFX up on my other screen so we can keep monitoring the trade opportunities. Okay, brilliant. Good. So let's proceed forward. So this is the profit expansion trading strategy. Let's go over that. This is an end of day trading strategy, which I'm going to be showing you just here, and the full formulation for how it's going to be. So everything that I'm showing you here is going to be it's organized on daily bars. It's organized on daily bars. So do bear that in mind as we go ahead and place the trades. So do bear that in mind as we go ahead and place the trades. And then you're going to see that that's very pertinent for that. So before we continue on, obviously, everything that we're doing this morning, including the live trading, does carry a degree of risk. Trading on margin carries a high level of risk. Might not be suitable for all investors. Obviously, a high degree of leverage can work against you as well as for you. All the information provided is purely for educational purposes. Vedanta Trading Limited and the presenters are not financial advisors, do not recommend any securities of any kind. Any securities mentioned are cited only for illustrative and educational purposes. You should be aware of all the risks associated with foreign exchange trading. Seek advice from an independent financial advisor if you have any doubts. My name is Rishi Patel, with a background in computer science and a video production business. Didn't pan out the way I want. I looked towards the financial markets in 2008. I have been trading full time ever since 2009, and so obviously, along with Thiru, have racked up quite a bit of experience. I don't know if we've already mentioned, but we actually have worked and consulted on trading floors for various companies. We've also we've traded as well on behalf of the company's money that they provided us to do that with. We ran live trading seminars. We ran workshops as well. In between now, when we started and now, we've coached well over 20,000 people, not only in webinar environments like this, but in live seminars most of the time. Everything that we do has transparent track records behind it, all research-backed systems for which there was a lot of the statistics we've shared already, and open door support just there as well. So masterthemarkets.net is very much the website. You can check out the website. If you want to, by the way, join the live trading environment in the evening, then you can click onto the website. I'm putting the address up in the chat box for you all now. If you click onto the website and you actually just go over to the blue box just there and put in your name and email address, it will send you a link to join the trading room this evening, and there may be some possibilities for 80% RV trade opportunities this evening if you'd like to step in and watch, and that's going to be published live and in real time. As with all of our presentations here at Master the Markets, there's going to be interactivity in this one as well, and obviously the kit the prize that we've been handing out over the last couple of days has been the Traders Essentials Kit. We're going to be giving a 50% discount to that. And if you win that, then you can claim the 50% discount, which will also include a ticket to TradeSpace Camp that's absolutely free of charge. You can come down to the workshop with no cost. The workshop on our website retails £497 plus VAT, and it's an intermediate/advanced workshop which will take the teachings that we've gone over in this in the 5 to 6 hours that we've had to spend with you in live markets. It will take that into a 2-day environment. We will get to go into much more depth and move at a faster pace as well, depending on the ability levels of people in the room, which generally tends to be pretty sound, so we can move at quite a pace. So that's a fantastic environment to be in to form the right types of mastermind alliances. As I said already yesterday, it is not about working by yourself. It is not a lot of people do that. A lot of people go ahead and work by themselves. A lot of people fool themselves into thinking that they've progressed a lot further than they actually have, and unfortunately it's the reason that the bulk of traders will never ever end up making a net bottom line profit. They just don't know how to shortcut the journey. They just don't understand what parts of price are relevant, and everything that we're showing you this morning and in this webinar in the last 3 days has all been statistically backed with probabilities. Yes, we haven't necessarily had trade setups where we can demonstrate that, but we're trading an exact plan, and that's our goal. So we will be continuing to place trades this morning should we get the pertinent setups. We'll continue to show you the statistics behind why we're doing what we're doing. So we'll carry on with live trading. I'm also going to show you the profit expansion strategy review and the Q&A. I'm going to do that for you just there. So with the profit expansion, again, every strategy here at Master the Markets starts with a concept and an objective. Now, remember these two things that you absolutely require before you can move on with a strategy. Before you can even move on with constructing a strategy, you need to know what your concept is, what your objective is, and that's absolutely key. So as I've already said, I want to capitalize on market compressions and indecision. Usually signs of a build-up of pressure is what's relevant here on the profit expansion. Now, turning points and market accumulation is the objectives of this. I really want to look to capture either potential manipulation spikes in the market, which are caused after an accumulation, and that's normally what the profit expansion will be based around. There's an accumulation in the market, and after accumulation, there's generally a manipulation and then a profit release. So I want to capture either one of the two by way of range. So either the manipulation spike or the profit release spike. Now this methodology, I'm not going to go over in much detail this morning, but we actually go over this in our 2-day advanced course, which is only for traders that have trading experience, and that is called Traders Toolbox. And in Traders Toolbox, we teach you how to use things like the Smart Money Indicator, which is an absolutely superb tool to be able to construct profitable concepts and objectives, and then take the parameters and construct from scratch a strategy which will make money and fit your personality as well. But again, as I've said in the past, as Thiru has already said, the Smart Money Indicator is absolutely an essential tool. Regardless of what you're doing, you need to map swing highs and swing lows consistently. If you don't do that, none of the trades that you take around concepts like Fibonacci, around drawing trend lines, around drawing anything actually related to swing highs and lows, which is most things, you won't actually have an idea. And the most important thing these swing highs and swing lows give you are consistency by way of trend. So that's the key. Brilliant stuff, and that's the key just there. So the accumulation phase, the manipulation phase, and the profit release phase is what's important in the market makers methodology. And the accumulation is, generally speaking, where we see the profit expansion setups taking place, and so we look to capture the manipulation phase from that. So what is profit expansion? Profit expansion all around trading inside bars. So inside bars, for anyone that doesn't know, is a bar in which the current range high to low is completely engulfed by the previous bar's range high to low. So that is to say that we are looking at the range of this particular bar just here in relation to the range of this particular bar just here. You can see that you have a lower high and a higher low in relation to this bar's high and low just there. And if you have that set up, that is classed an insider bar, and then specific insider bars as well, which we filtered down according to a filter which we discussed in our LTM Advanced program, which is an ongoing program which provides superb support to traders. That is a filter that we have actually learned from one of our senior mentors, which actually provides you with a method of trading specific insider bars that have higher probabilities of breaking out than general insider bars. So there are very specific types of insider bars that we're looking to trade, and along with the Smart Money Indicator, what you actually get is a profit expansion indicator as well, which actually highlights for you where those specific insider bars are. Not just any insider bars, but absolutely refined, absolutely key insider bars to gaining large ranges on the following bar. And that's what we're looking to do just here. So market compression and indecision followed by an aggressive breakout. Everything that I'm about to show you again is compiled by the Master the Market research team. It's all researched backed methodology, and that's what we are looking for just here. So that's what we'll continue to look for as well as we move on into the in the morning. I'll show you some more of that trade research that we're doing just there. So let's look at the research study guidelines. So what were the questions again? You know, everything that we start with when we start constructing a strategy, we're going to ask ourselves some key questions. We're going to have some key guidelines as well that we're going to move through. So we basically had profit expansion opportunities, which we measured over 3 years from 2012 through 14 on these six currency pairs just there. You can see euro dollar, pound dollar, dollar yen, a few others. The entries that we used were based on quantifiable parameters and on 4 degrees of freedom. So the trend there was identified by price action only. Now, this strategy, it is not possible to construct, it is not possible to test, and it is not possible to trade in real time without the smart money indicator. You must have a smart money indicator to be able to research, test, verify, and trade this in real time. And that is what's important. That's what's essential. I cannot overemphasize that enough. Every single thing that we've done and built has been based around that indicator, and it is a very powerful one. It does give you highs and lows in real time with no redraws whatsoever. And the trend is identified according to the smart money indicator as well. Stops were based on technicals only and kept consistent. Entries and stops were kept constant, and only exits were varied. So that's the key set of statistics just there. I'll show you the trade journal as well for the profit expansion strategy. So the trade journal I will actually show you very shortly. So bear in mind. And that's a good question. Someone was asking me if the smart money indicator is a standard indicator or your own proprietary indicator. Great question. The smart money indicator is our own in-house algorithm. It's not constructed by us. The smart money indicator is actually constructed by one of our senior mentors who has decades and decades of experience not only researching the market but making pure price action based strategies on which we've constructed everything we've put together, including the morning glory, including the 80% RB trade strategy setups for which you've seen the account statements. That has been constructed by that. We have been given that opportunity to have access to that. And so the Smart Money Elite indicator you can see here on my screen is a master the markets indicator. It is our own indicator. It's not available online or in a forum, or you won't find it on the web. It is accessible only through Master the Markets, and I'll give you the details for how you can get access to that a little later on into the morning. Let me write that down so that I don't forget. Brilliant. Okay, fantastic. So that's what we're looking to do. The Smart Money indicator as well, we can give you a little coaching and also show you exactly how to use it too. And so we'll, again, we'll show you exactly how that can all work for you, should that be what you wish to pursue. If you're really serious about trading, the Smart Money indicator is an essential tool that you're going to use for absolutely anything. For example, now this is telling me that the euro dollar 1 hour is in a downward trend because it's fulfilled a key price action setup according to the Smart Money indicator. It's giving me the highs and lows all in real time, and you can see a swing high has just been formulated here on this euro dollar just on the last bar. These are all essential pieces of information and will, by the way that they construct themselves, potentially change our outlook for the day, for the morning on an intraday basis. So really important. Like, we can't operate without it, and I don't understand actually how any successful trader can move without consistent swing highs and lows, without redraws. So that's the Smart Money indicator just there. I'm going to show you the journal of the profit expansion strategy setup, because that's really the research journal on which we put everything together. And let me go ahead and open that here now. So we'll just pull that open on my screen, and it will be very systematically located. So let me just pull that open there under the live trading week, and there we go, profit expansion. And great, I've got a crib sheet there for you as well, so brilliant. Okay, good. Brilliant. Okay, so let's go ahead and pull open the journal just here for the profit expansion. Okay, so let's pull open let's go ahead and pull open the journal just there so I can show you exactly what we do have by way of trading strategy and exactly how we backtested this, what we looked for, how we kept the parameters consistent, as well as how we look to exit the market on each particular trade that we took as well. So great. Okay, good. So this on my screen here is the Profit Expansion Trade Journal, and so you can see the amount of information that we've logged is substantial. So what we basically look to check just here are if we kept the entries very consistent, so without any movement by discretion. How would this have performed across 5 different exits? So what we did, let me show you this journal after showing you actually the next slide in this presentation. What we've done just here is taken 5 types of exits. So the 5 exits that we analyzed, remember, we kept the entry and the stop parameters consistent. We found the best entry point, we found the best way to position the stop, and then we varied the exit because we wanted to understand where was the optimal exit out of an insider bar trade. So here, for example, you can see the first exit was on the high of the previous bar if we're going long. The second exit is the close above or below the previous bar. The third 3 buyer bars or seller bars. Fourth one is previous swing high or low, and then 10 periods. Now, if you look at the type of exits that we've achieved, I'll show you this graphically. So the first exit, if you had an insider bar just here, this is your inside bar. Your first exit would be on the break of the high of the previous bar. That's the first exit we measured and checked. The second exit is on the close above the previous bar to the insider bar. Let me show you what that means graphically. Go ahead and pull open the drawing tool just there. So this close here is above the previous bar's high. That was the second exit just there. Now the third exit, of course, was the previous swing high or low. The previous swing high or low was the actual fourth exit just there, and that's what we looked for. Now, when I say previous swing high or low, again, how do we measure swing highs and lows? They need to be done consistently. Otherwise, when I measure in backtesting how exit 4 performs, it will not give me a consistent result. I need to get a consistent way of measuring these highs and lows to trade the profit expansion strategy, and that's where the smart money indicator kicks in. So if I have a confirmed swing high in the market, I look to exit on that level just there. What would happen if I do that? That was the fourth exit. The third exit was on 3 buyer bars. Any time after 3 buyer bars are formed, not necessarily consecutively, but after 3 buyer bars have formed, you will also then gain access. You will also then gain access to the 3 buyer bars just there. So that's the key at this time. Okay, good. The fifth exit and the final exit is after 10 periods. So anytime after we've had 10 bars forming, what would be the exit price? So these are actually the 5 different exits I'm showing you graphically that we would use on the inside bar. Now, obviously, if you're going short, we'll just take everything the other way. And then you can obviously, take the trade short if you're looking to take the trade short. What you're also looking to do as well is you're looking to understand where the optimal exit point is, and that's why we've done these tests just here. So what we've done on our Excel spreadsheet is gone over the 5 different exits and asked ourselves, what would we have made each time for each exit should we have used that particular opportunity? So you can see by way of R multiple and also in terms of pips what we have made for each type of exit for each year. And then when we collate the results, we also get a certain profit and loss and certain performance as well. Good. So that's important to note. So before I show you actually the final set of results, I want to throw a question out there. And the question that I want to throw out there is, let's have a look at what's coming up, in fact. Let's have a look at what's coming up. I want to ask you, or I'm going to show you actually how we enter these trades first. So let me show you that. and fantastic. Okay. Okay, good. Okay, good. So, yes, let me ask you all a question first of all. This is going to be a general question, and it's going to be based on an educated guess, which you're going to make. So I've shown you the 5 exits here on this particular insider bar strategy. Exit 1 being high of previous bar, exit 2 being close above previous bar's high, exit 3 being 3 buyer bars, and exit 4, of course, previous swing high or low. Exit 5 is 10 periods. Based on an educated guess, where would you say, and what I'm going to do is I'm going to hand out a little prize here for the correct answer as well. I'll send you across a discount voucher for the Trade Essentials kit, along with a free ticket to Traders Basecamp. If you can get this right, which exit was the best performing exit over the 6 currencies we measured, over the 3 years we measured each currency? Which exit do you think was the best exit? The first correct answer is going to win a prize. I'm going to substantiate the answer as well by showing you the compiled results. Okay, lots of different answers coming in. Fantastic. So that's very good. I've got lots of different answers coming through. Good. Let's actually, what I'm going to do is I'm going to substantiate what the correct answer is with the actual spreadsheet that we've used as well. So I'm going to show you what that actually looks like. So here is the backtesting spreadsheet. This is where we actually compiled the answers to these questions. As I said, we worked out the entry date. We also looked at trend. We looked at retracements. But again, all of these things can only be done with the smart money indicator. It's very important. And then we asked ourselves, where would we have got into the trade? Where would our stop have been? And what would have been the profit or loss for each trade based on each exit? So this research actually took 6 months to complete with a team of 6 people. So if you're going at this yourself, then you have little or no chance of completing what you need to be able to construct a trading strategy. Unfortunately, most people still think, are obsessed that they can do this themselves. And we know the level of research that's required in order to make a profitable strategy. And we know the level of thinking that's required. You've got to bounce your ideas off someone. If you don't do that, and you've got to bounce your ideas of someone credible as well, because there's no point going out to the local, let's say, your average supermarket worker. Not that I've got anything against supermarket workers, but on asking them about, where you feel your exit point should be in by way of these 5 exits, because they're not best qualified to tell you. They specialize in what they do. And a lot of people don't go to the right people with the right credibility to ask questions, to surround themselves, and so they end up making their journey very, very long. Unfortunately, that's just the way that most people are conditioned. They consider money to be their most precious commodity instead of time. Unfortunately, time is not something that we can get back in our lives, because once the time is invested, it cannot be regained. And if we really don't understand that principle, that's why you see a lot of traders that come to the Traders Basecamp workshops who are 50, 60 years old, have been working their whole lives, still have to go back to work even at 60 because they don't have enough in way of savings, because everything they're making is going out in expenses. They're not able to make enough money to carry on surviving. Unfortunately, that's because they never took time seriously and made something work in the short term for them, in the way it's going to work in the long term for them, so they can have their cash flow covered in the long term. And it's quite unfortunate as well, especially when I had one person come into the office recently who was looking for a solution from us. Said to me that he's actually a lot of respect for the gentleman, very nice guy. He was 62 years old, and he came to me and he said to me, "Listen, I mean, I'm having to go back to take this job offer. It's going to pay me relatively well. I'll get paid for it pretty well, but I'm going to have to commute an hour and a half each way into central London, and I'm 62. You know, can you give me a solution for trading?" And it's really sad when you come across people like that, because it's at that point in their lives where it's hit them that they need to make their money work for them instead of working for money, and that they need to surround themselves with credible people. And that's why people that go to other trading courses still end up at Master the Markets, because we provide real solutions. So shortcut that journey. Get yourself a copy of the Smart Money Indicator, get yourself your Trade Essentials kit, get yourself some coaching with us one-on-one. You can speak to Milan, he'll be able to book that into our diaries, and then you can do that with us. You have to, our time, we invoice for at £200 now. Our time is very valuable. We're the best at what we do. We get results. We can show you where the loopholes are in strategies that you're trading. But obviously, if you want to do something, if you feel that you want to take trading seriously, if you've got to that point in your life where you've said enough is enough, I don't want to carry on with the daily grind, I need to make a change, then reach out. We will help you to do that. As long as you're determined and you bring the drive and the motivation to the table, we'll give you all the direction that you need, no problem whatsoever. Let's answer the question by way of which exit was the best. So pound against US dollar, you can see I've compiled all the results for just here. On a year-by-year basis, this is the euro yen and how it's performed on a year-by-year basis with each insider bar setup as well. If we go across to, you can see all of this has been done manually, by the way. All of this has been done manually. So we can prove the concept to ourselves. We test for 3 years across 6 currencies. That will allow us to test the concept. So you can see, if I show you the collated results for all of the currencies just here, you'll see very quickly that there are 258 trade samples in the general results. Now the difference between the general results, which is this set of results here, and the alpha results incorporate the profit expansion indicator, which tells you specific insider bars to trade around. Now the profit expansion indicator comes bundled with a Smart Money Indicator. It's free. There's no additional cost for that. And it allows you to trade a very specific type of insider bar. I'm going to show you what the difference is in the results in just a moment. But look at these general results. Now these general results has given us 258 trades. Now someone said to me earlier in the webinar, they said to me, of all the strategies out there, which has the highest probability of winning? Show us how to trade according to that strategy. You see, having the highest probability of winning is not really what you want, because the highest probability of winning is this particular exit just here, which is exit 1. But exit 1 is not the most profitable exit. It has the highest probability of winning though. How can that be? Well, obviously, when you add your total profits and your total losses, you get 31.49% on exit 1. But if you look at exit 2, which only has a 45.74% probability of winning, less than 50%, your exit 2, on the other hand, gives you a net profit of 69.03%. It's more than double exit 1, which has a higher reliability. Now that's simply because this has a better actual reward risk ratio. And that's the part that you really need to understand. It's not about just the reliability. It is one part of it. It is not the be-all end-all. So asking the question of all the strategies out there, which has the highest probability of winning? Please show us how to trade according to this strategy. No, that's not the right way of asking that. So exit 1 just there has a 31.49% upside. Exit 2 is 69.03. Exit 3 has a 35.23. The best. Okay, so just getting an update from Tiru here on a message. So we're just looking at the pound dollar chart. And if we look at that, we're going to cancel the trade that we've got pending. The pending order to open, we're going to cancel that. It's no longer relevant. So just so that you know, that's what we're doing. That's the action that we've taken already. We've cancelled it on our ends, but we are cancelling that particular order. Let's go ahead and punch it in as well. So cancel pound dollar pending order. Okay, so that's out of that pound dollar market. We never triggered, and we've cancelled our pending order. Tiru will give you a full analysis on that when he gets into his section just there. So moving back to the spreadsheet, exit one gave us, and I've collated this just here as well. There you go. Exit one has given us a 33.65% upside. Exit two has given us a 68.49. Exit 3 has given us a 30.43% upside just there as well. Exit 4, 27.12 and 33.16. You can see the best exit is exit 2, and I could see that the correct answer to that has come in from Mr. Williams, who won a prize with us yesterday. Congratulations to you for getting the correct answer. You're absolutely spot on. I believe you're in Australia, if I'm not wrong. That's what Milan told me. So fantastic. Congratulations to you. Let's move on. One thing that I want to do as well is just complete up my profit expansion presentation. I want to show you as well. I want to actually be able to send you this analysis, because you see what we've concluded is that it's not so much about the most profitable exit. Exit 2 is the most profitable exit. Can everyone see that? Punch a Y into the chat box. Let me know you're still with me, because I'm moving at quite a pace and I want to know that everyone's still here. Punch in a Y. I want to see at least 50 Ys before we carry on. Go ahead and punch Y into the chat box. Let me know that you're still with me. Keep going. We're about halfway to where, roughly halfway to where we want to be. Superb. Great, fantastic, thank you. So good, we'll carry on. So it's not about the most profitable exit. What it really is about, the question that we really need to ask ourselves here is, what is the biggest drawdown? Where is the drawdown? How much is that be? Over what period of time is that going to be? Those are the questions to ask just there. And if we can ascertain that information, that's actually going to help us more than knowing where the most profitable exit is. Now, if you look carefully at this maximum drawdown, you can see carefully here that the maximum drawdown on exit 2 is 5.02% over a maximum consecutive losing period of 3 months. This was 5.67% losing month here in July 2013. So we know the maximum downside is 5.67% over those 3 years, and we know the maximum consecutive losing months are 3. So that's very important to understand. The other exits have a much higher drawdown as well as a lower upside as well. This is the essential piece of information to know. When we compile everything into an equity curve, you get something that looks a little bit like this. And this equity curve has been made in terms of R, and it's made per amount. You can see that the exit 2 has yielded us a £70,000 return over the 3 years that we've traded it. And it outstrips all the other exits by many multiples over. So that's what's important here. Now, I have a question for all of you. Would it be useful for you to all get an access and a copy of this spreadsheet just here, which has the breakdown of the collation of the results, the whole templates for how we've constructed the entire strategies, backtesting, and how we've logged absolutely everything? Would that be useful for you to gain access to? I want a Y into the chat box or an N if you don't feel it will be. That's great. Actually, I've got I've got more Y's in the chat box now than I had when I asked if you could all hear me. So thank you very much. Great. Okay, I'm going to show you a little later in the presentation how you can get access to that. So not a problem. Want to add as much value as possible here at Master the Markets. I think that's important to do. So we will look to do that. Okay, so the entry is just here on the profit expansion. If you have an inside bar, then one of the variations you can use to enter, it's not the best entry that we came across in our testing, but it does still work and it does still make a profit, is the high of the insider bar. So the high of the insider bar is actually one of the best entries that you can use. It is not the best, but it is definitely a way of getting into those trades just there if all the other parameters are satisfied. Now, we have an interactive question just here and an opportunity for someone to win a superb prize. And the question is, what are the 3 phases of the market maker's methodology, and which of those phases does the profit expansion look to capture? I will give you about 3 minutes to answer that, and I will put myself on mute for the meantime, and then I'll be back to look at the answers and let's see who's got the correct answer in the shortest space of time. Okay, fantastic. Lots of answers coming through, so thank you very much. We'll analyze those and I'll get back to you shortly, and I'll send the winner a direct message to let them know who they are. Let's continue on. So the profit expansion, what were the findings of the strategy? You can see here that Exit 2 yielded the best net profit. Can everyone see the table that's on the screen just there? Can everyone see the table okay? Is that okay? Can everyone hear me okay? Can everyone see the table okay? Punch a Y into the chat box. Let me know that that's okay. Okay, that's great. Thank you. So you can see that Exit 2 has had the best upside just there. And as a result of that, that's the exit that we use on the profit expansion indicator. The profit expansion indicator is also the result set. It's also the exit that we use as well when we're trading the strategy according to the actual crib sheet. Now, that's the first part of this. So I showed you the general results. Now, in the general results for this particular strategy, we had 258 trades. You saw that already. Now, of the 258 trades, Exit 2 had 118 winners and 140 losers. The reliability was less than 50%. It still yielded a net profit. But ideally, in the trading space, what we want to do is minimize the amount of trades we're taking, because the more trades we take, the more fees we pay, the more chances there are of making a mistake, the more slippage we can get, etc., etc. So what we did is we introduced the alpha filter. Now the alpha filter is, again, it's a piece of technology that's given to us by one of our senior mentors, which we've integrated into an indicator which is bundled with a smart money indicator for free. And you can see that actually that only gives you 188 trades over the same period of time. It's given us 70 less trades, but it's still retained the net profit, 68.49% exit 2 yielded, as opposed to 69.03. But you're only taking 188 trades. The reliability stayed the same. So you're actually getting the same upside for a lot less work, probably around about 50% less work. You're still getting the same upside potential. And that's why we use the alpha filter, and that's why we use the profit expansion indicator, which is bundled along with the smart money indicator as well, for free in that package just there. So that's the key, and that's what we look for now. So today when we trade this, we use the filter 1 results, which is the alpha filter, and we trade that across exit 2, and you can see the expectancy of that is 0.43, which basically means the expected net profit for 100 trades is 43% per 100 trades taken on that particular trading strategy. So profit expansion is one of the key trading strategies that we have just here. And you can see the comparison between the general results and the alpha filter is substantial. So you can see with 188 trades, we're yielding this almost exactly the same net profit as we are with 258 trades. So that's why we use that particular filter. So I've just shown you in this presentation some live trading with real cash in real time. We've done the profit expansion review, and we've handled the Q&A as well. So one thing that I do want to do here is just clarify a couple of questions that have come in. So I want to clarify these questions. So I'm going to do that now, just looking through what I can quickly clarify. Okay, someone is asking me around about this confusion around the Traders Essentials kit. It's £500 reduced to £97, much bigger discount than 50%. The discount that we're giving on the Traders Essentials kit is the discount not from £500, but discounting it from £97. So if you win a prize, you're actually able to get a 50% discount on the £97. So we're discounting the discount, which is super generous of us. So if you win a prize, you're able to get access to that. If you don't win a prize, it doesn't matter. You can still pick up a copy of the Traders Essentials kit. Now I've gone through all of the questions on the actual presentation. Now we finished the allocation of prizes that we had to give out on the live trading week, so no more prizes at this time. The opportunity now is to make a purchase of the Traders Essentials kit. But what I'm going to do is I'm going to do something that's rather special here that we don't usually do. So I want to just clarify exactly what this is. This is a tool set of 7 essential tools that any trader needs to be able to be consistent, quantified, and successful by way of bottom line net profit. Okay, to construct with the confidence that we have constructed our strategies, to trade with the confidence with which we trade our strategies, and to make the same net bottom line returns which you've seen in the account statements which have been sent out. This Traders Essentials kit is a superb piece of technology. And so what we're going to do is I'm going to drop the address in the box in just a short while. We're going to give you free shipping anywhere in the world. That's the first thing. But what I'm going to do as well is for the first 10 purchases, and I will make it 10 purchases because of the number of people on the webinar, we want to give everyone a free chance to be in the top 10. We're going to give you the highly detailed profit expansion testing spreadsheet, which I showed you already. I'm also going to give you one of the profit expansion crib sheets that we've constructed as well, so you can see the exact rule set for how to enter, manage the trade, and exit. I'm going to give you that as well. I'm also going to give you, in addition to that, the stops to cash trading strategy and presentation. That's all there for you as part of the Traders Essentials kit. For the first 10 purchases, we're going to give that out. So to summarize, you're going to get a Trade Starter Pack DVD, the placing orders sections, trading strategies that we put in there, the live trading video script sheet template, the trade journal template, which Tira will be going over in detail, the trading psychology audio program, and some bonuses. We'll ship it to anyone in the world for free. We'll give you a discount to the 2-day Traders Basecamp of 50%. And for the first 10 purchases, the Profit Expansion Advanced Journal and the crib sheet as well. So you can see the exact rule set and the stops to cash trade strategy. It is £97 plus VAT. The address that you need to go to if you would like to make a purchase is the one that I've just dropped into the box now. It's tradersessentials.co.uk, and you can gain access to that for £97 plus VAT. If you have already made a purchase over the last 3 days, I will ask my team to send you out these additional bonuses by way of email after the live trading week is completed. But if you make a purchase of the Traders Essentials kit in any time over these 3 days that we've done, that was Monday, Tuesday, and today, for £97 plus VAT or the discounted amount, then we will happily give you all of these additional bonuses, as well as the profit expansion strategy, as well as the testing journal for it, as well as all the standard items in the Traders Essentials kit for the discounted price of £97 plus VAT. So what I'm going to do is I put the address into the box. Feel free to take around about 5 to 10 minutes out to make a purchase. We're going to take a very short break before we move on to our next section. The time now is 9:18. We're going to recommence at 9:30 a.m. Where Tira will take over and walk you through his analysis thus far on the pound dollar, take you through strategy review, as well as how to use the trading journal and the upside benefits of doing that. So that's the Trade Essentials kit. I will now put myself on mute for the next 11 minutes before we then switch over and continue on. And any questions I'll answer as soon as we're back at 9:30 a.m. So stay tuned, take a 10-minute break, and we will be right back.
Okay, hello and a very, very, very good morning again, everyone. So I guess you're all back after a short break. So now we are just going to look quick analysis into cable. Right, just looking at some questions here. Okay, good. Right. Okay, so let's carry on. So I did mention in the morning that about the red lines, right? So there's one level here, the red line, which I said if it did cross above, below that, or above the yellow line, which was to the upside here. So when it crosses below these red lines, now there's a very high probability that today will be an up to down day. Be an up to down day. Now, follow this train of thought, traders. Okay, this is very important, and you probably will never hear this anywhere else. Now, the thing is, there's two ways in which a range can form. Follow this train of thought first. There's two ways in which a range can form. Now, first, you have, when you look at the daily bar, yes, Wayne, I'm just coming to that. So if you see, first of all, let's start with the discussion of the range, okay? Range, most of you know over here what it means. Basically, it's high minus the low, right? That's pretty much it. High minus the low will give you a number. And if you want to take an average of that, you do it over 5 days or 10 days, and then you can divide it and you get an average. And that's what we call the ATR. And in that bracket, you can then specify how many time period you're going to do it for. Now, this whole range calculation, we would do it on the daily time frame, okay? On the daily time frame, on all these bars. So we get that number from there first, right? Now, the second thing that we then do, once we got that number, let's say, for example, that number, let's say, it's going to be, for the last 10 days, we've calculated it, and we found out it's going to be 100 pips, okay? It's going to be 100 pips. Now, that's what my average range I have found out to be over the last 10 days. Now, that range, what I'm saying, that 100 pip range can either form, now follow me this very closely, can either form in two ways, okay? Can either form in two ways. That range can form in either of two ways. The first way in which it can form is an up to down day. An up to down. So what do I mean by up to down? So look at now this, now you got to go into the shorter time frames. This I've got from the daily time frame, okay? This number I've got from a daily time frame. From that, then I'm telling you, when you go into the shorter time frame, let's say for example like this 1 hour time frame, it can form in two ways, that range, okay? Either from the up to the down. Remember, we're not talking about close here, right? We're just talking about high to low only right now. What I'm saying is, from the open, right, it can go up first, just like this. What happened is, you look at all the 1 hour bars, right? So if I just put the open here, and then now, from the open, it went up a bit, just like today, and then it drops down. See, look, drops, and then all I'm saying is, once it crosses the red line, where we have found the level to be through our mathematical algos formulas, once it crosses that red line, there's a high probability that it will form this 100 pips from up to down, up to down. So once, maybe let's say the 100 pip level is here, or even can be 0.8, let's say 80 pips or whatever it is, that level that you calculated. There's a high chance it will form it from a up to down way. So then after that, then you can come and hit it like that. So in this way, it's formed this range which you're seeing on the daily time frame, from going up first from the open and then coming down all the way and hitting its 100 pip range. Now, here's the next critical point. After this point, where it's formed this range already, we don't care anymore, because the objective of this strategy is just once it forms this range to 80% probability, which you must find from your research, which we over here at Master the Markets, we have all the stats for. Right? We have all the stats for. That's why we talk with this much conviction and passion. And this is why it really pains us when people are just going across this whole industry so blind, and they have fooled themselves just because of that ego of theirs which has blinded them. And the reason why I'm telling you that is because I have been through that stage as well. But I always honestly review and contemplate what form I'm progressing and where I want to get to. And time is one thing, traders, that is not in our favor. Right, so once it's done its range, we get out. After that, if then the market goes up and comes down, we don't give a damn. We don't care. We don't care. We don't care. Because after it's done its range, right? Listen to this carefully, it's important, then you need to understand this. Once it's done its range that you have formed from your research, what 80% of the time it forms, once it's done its range, anything else that happens after that, you're only playing the close of the bar. You're only playing the close of the bar. And that is not a strong concept. It's not a strong concept that stands through time. Stop wasting your time. This is why traders, if you really even understood 20% of what I've said so far, if you really understood what I've told you 20% so far, then you will stop all this indicator bullshit nonsense. You will use, if you want to use indicators, you use it in a very different way then. Now, my final thing, which I want to then tell you in this range formation, so it can be an up to down day, or it can be a down to up day. Remember, the same 100 pips can be achieved by going up first and coming down all the way to hit the range, or it can, from the same opening price, let me just make it all the same color here. Right. So let me see this now. Right, so the opening here, if you look. Now, okay, so if now I'm talking about a down to up day, okay? So down to up. Down to up. So now a down to up day is if it goes down first below the opening price, and then it comes up all the way then to form its 100 pip range. Okay, so understand that the range remains the same, traders, in both scenarios, 100 pips, but it's how it's formed. That's what's important. I will reiterate one more time. I've only told you one part of the puzzle. If you think, oh, this is the Holy Grail, then I'll just say good luck. Nothing is the Holy Grail, traders. It's a combination of confluence of factors. It's stacking your probabilities to your side and being in the present moment with absolute discipline and knowing when to get out of the market. Now that is the Holy Grail. And if you really understood what I just told you of the confluence of factors which gets you to consistent profits equal to the Holy Grail, then you know That is a step-by-step process to get there. First, your knowledge pool must increase. Your knowledge pool must increase. Yeah. Now, I just want to know honestly. Let's see how many of you are really honest over here. How many of you have ever heard anybody, anywhere, in any training company that you've gone to, explain what I just explained in terms of price in this way? How many of you? See, type in a yes or a no if you have heard this anywhere in terms of just price explanation, in how the range is formed from up to down or a down to up. Yeah, and I guess that's much. 80-90% of you are all saying no. Some of you probably even haven't understood what I've just told you here, because it will take your mind some time to understand what I just told you. Yeah. Now then the next step is then putting it all together to make your cash. Okay. Okay, good. Now, let's see. Okay. Good. So we can all now go on to the next part over here. So let's now see what we are looking at over here. Okay, good. So now, any questions from what I've just told you just now? Then we'll go to the next section right now on the strategy optimization. Wayne, I can see that you say you have seen this. Did you understand it last time? Are you using it now in your strategy? Do you know how to use it? Are you not sure? Because Wayne, you said you saw this in another webinar, so are you clear on how to use it now? Because it's not only one part of it, you see. You must know how to use it using other factors as well. Okay, not sure if it's there or not, but doesn't matter. If you all have any other questions now, you can just type it in if you have any other questions at all. If not, I will see if there's any other questions popping up later on, then we will move on to our section for today. Right, let's see. Yeah. Okay. Final part. Yeah, you took the high-low, but not in the detail. That was what I was asking them, Wayne. Yeah, okay, very good. Yeah, because you know it's very important. It's very important to understand whether it's going to be an up to down day or down to up day. It will put the probabilities to your side incredibly. But I don't expect everybody to understand this at this moment. You have to go down. You have to go by yourself and really think about what I've just told you here. Then only it will all start to sink in. Okay, because it didn't for me as well when I was first taught this. I've heard other people even say up to down day or down to up day, but nobody ever explains it to this detail. Yeah? Okay, calculate the daily ATR. That's right, Xiao, that's right, yeah. Use the daily ATR. Yeah, it's the hourly high and low range, that's right. Yes, about breaking the red line, please. Okay, John is saying. Breaking this red line, all it means on one part, if it breaks this red line, break this one line, is one out of three factors, yeah, one out of three factors which will put now the probability, for it to become, in today's scenario, a down, an up to down day, which is what I explained, right? Go up and then coming back all the way down, okay? To some part of an extent, understand? Okay. Okay, good. So that's what we got so far. All right. ATR, ADR, yes. I think I forgot what ADR really is. Can anyone tell me what ADR is? I do remember seeing, is it dynamic range, is it? ATR is more than enough for this purposes. I don't really research a lot into, it's the same. I mean, average daily range, average true range is all the same. Average true range, the only difference is that there's three ways of calculating it. We talk about this in the Trader's Toolbox because that's where we talk about all kinds of tools and how they're brought about from price. Now, average true range basically incorporates average daily range plus. It will also include all the gap scenarios as well. Right? It just won't take the high and low on a gap. It will take from the high to the previous day close because that's the true range. That's why it's called average true range. Understand? That's what I would say. Okay, good. Yeah, that's right, Wayne, that's right. Wayne was saying something. Yes, yeah, Linda Rushke, yes, she's the only one who talks about this up to down day. But I've never seen her in any webinar explained to this way because I never really understood what she was really saying until you can put it all together, then when it makes sense. And the next thing is that Taylor principle. I don't know, but Taylor usually only talks about a few parts, man. Especially he talks about the low being taken out and then trading it against. I mean, they all give you the concepts, but they never give you the details, and that's what you got to figure out, right? Because as we professional traders always know, is that if you teach everyone which horse to go and bet on, the edge is completely lost. And a true trader who's got his edge, who can make money out of the markets, will never reveal all of it unless someone earns it. And the people who really earn it are really less than 1%. Okay. Right, so I got another one coming up here, up-down range. Let's say price goes up first and reverses down, the 100 pip range to be formed. So from where to where? No, so from what you have just mentioned, Tangavelu, is that from what you have just mentioned, the probability cannot be put to your side yet. Probably can. You have to know this red line, or the yellow line on the top, and you have to calculate that. I leave that up to you all. And a clue I gave you all yesterday was from the question I asked you all yesterday. What was the question I asked you all yesterday? Yeah, very good, Richard. Yes, that's what you asked, isn't it? Did any of you find the answer? So Richard has just gave me the question that I asked you all yesterday. To get that red or yellow line, first you got to look into that question which I gave you all yesterday. To use price as an intraday indicator, what do you look for and how do you use it? Did anybody go and Google it, find out the answer? Anybody found the answer on forums or any other tons and thousands of forums out there? Did you all find the answer? Or books? Or webinars? Did anybody? There you go. Nobody can. Wrong, Richard. No. Did anybody find it from any other websites? You see, this is the point, isn't it? I mean, yes. I mean, you all must face the reality. You see, one of the purposes, of these webinars, even Traders Basecamp and all that, is to raise your awareness. Only when you raise your awareness to truly where you are at. Truly where you are at. If the truth if the truth is that, traders, if the truth is that you are, let's say, in your life situation, you're 50,000 pounds or 100,000 pounds in debt, come to that awareness that you are in debt. If the truth is, for 5 years you've not made the trading work, then come to that awareness. If the truth is, you do not know how to read price action, come to that awareness. If you know the truth is that you're not making money consistently for the last 6 years, and then you come to the truth that you're fooling yourself, that you're coming to the turning point, come to the awareness, accept it. Because traders, this is very, very critical, what I just told you, because I only realized this after about 2-3 years into the trading journey. Because when we truly accept where we are at, what the magic happens here. Now listen to this very carefully. This is one of the most important psychological points that you ever have to learn if you want to turn anything around in your life. If you want to turn anything around in your life, this is one of the most important things of psychology you must understand. What is the magic that happens? What is the magic that happens when you truly, truly, truly accept where you are at? What is the magic that happens? You know what happens? It happens just like what happens in a satellite navigation system that you put in your car. The current location gets logged in. The current location gets logged in. Now, if you don't have the current location, but you have the destination there, because most of you will have some kind of destination, some kind of goal. Most probably not one that drives you and pulls you to wake up every morning to do this and sleep half as less as you usually do. But you will have some kind of big goal. You will have something like, oh, I want to make 250 pips a month. I want to make 10% a month. I want to make 5% a month. I want to make 60% a year. I want to make 20, 30,000 pounds a year. I want to make 500,000 pounds a year. You will have some kind of goal, destination. But the sad thing most of you won't have, and you are not coming, and you're not coming to the point of realization and holding on to the truth is where you exactly are at. Because when that honest truth really hits you, where you really are at and where you need to get to, magically the gap forms. Then the best, the most phenomenal instrument that was ever created, which is within you, will start to activate itself, which is your subconscious mind. Without the gap, traders, without the gap, you won't be able to get there. You must be honest to yourselves where you're really at today. If you don't know this information, if you don't have a clue what's happening, and then you suddenly realize how much big gap in knowledge you have, and if you have a gap in knowledge, if you don't even know how to drive that car, what chance is that you're going to get to point B? Almost zero. That's when the true realization will hit you, and you will get around like-minded people to get to where you want to get to the fastest amount of time, because that's the only way that you can get to the fastest amount of time. Because Warren Buffett is the billionaire today because he came across Charlie Munger, who's his business partner, right? Benjamin Franklin, who actually taught him about the investment possibility, right? That is what you want to do. Now, I tell you what, for those of you who are really hungry to learn this, the first point, you know what? I've made it clear to you all now that over there on the websites, on the internet, the forums, the books and all that, it's going to be very difficult for you to find this answer. It's going to be very difficult for you to find this answer. If there's one thing on the chart, which is going to be intraday indicator, what is it? What do you look for and how do you use it? Just as price. Just as price. What would you use? What would you use? For those of you really hungry, to find this, I'll see you all at Traders Base Camp. And if you remember, come and ask me this question. Right? Come and immerse with us for 2 days. And I'm telling you guys, man, we speak the truth. We know. We spend many hours and several hours. Because you know why? We love this game. We're hungry. be determined. Volume is nonsense, Richard. Sorry, volume is nonsense. Because in Forex, you can't get volume. Even whatever volume that you get is based on that broker's participants. Yeah. There's 3 factors of price that you can use. There's 3 factors of price that you can use to decide your up to down day or your down to up day to stack your probability to your side. Right? Great. Okay. So I have put that into that. Now let's move on. Okay, let's move on for today. Now let me see. I'll put on the presentation for today. So today is all about strategy optimization. Now how do you optimize your strategy? How do you optimize your strategy is what we're going to be looking at today. All right. So let's take a look at this. The 3-part methodology is what I told you all yesterday, right? Remember that you must have a crib sheet, okay? And I've told you all the different things that must be in the crib sheet, okay? Which is also known as your strategy component. The next thing is what we call the psychology component. The psychology component, where it talks about the consistent execution. The final part is your optimization component. Okay, where we look at the stats review. These 3 components must be in place. And you must continuously work on your psychology. Continuously. No stopping. No stopping. Okay. We cover this in Traders Basecamp as well, which actually comes as a free ticket as part of your TE kit when you purchase during this webinar. Fantastic offer, immense high value. I leave it to your choice. Because I know just that small level itself will filter out the people who are really hungry and committed. I told you right from the beginning, we're only looking for hungry and committed people. Not all of you are going to get to the finish line. That's why we got the different layers. Even when you come into Traders Basecamp, immediately you got a questionnaire, and immediately from the questionnaire we'll start to assess how committed you are, how passionate you are. Because if you're not, what's the point? Don't even bother even spending £1 to get to the next level. It's very different here. It's very different here, traders, because you know why? Because in this company, Master the Markets, Vedanta Trading, because we are traders first, trainers second. The next part out of this whole 3 components is the strategy component, psychology component, optimization component. Then after that, we are then looking into the stats. Mainly we're looking into the 2 stats, reliability and expectancy. And from that, you can optimize your strategy. And then we go back into the first. If it's not to your liking, it's not to your levels that you have put and goals you have put yourself, then you go back to the crib sheet and optimize it, start optimizing from then on. Continue this process. Don't give up. Resilient mindset and honestly know where you're at. Because at that point, when you know honestly where you're at and where you want to get to, the gap will form. Somehow or some rather, you will meet the right people. You find the right books. Somehow you find the answer. Trust me on this. I've traveled on this journey, I know. Because it's not that easy to meet institutional quants. And our story of how we met them is not an easy one. And even after we met them, for them to teach us what we know today, it's not an easy one as well. But it's the hunger, the passion, the honesty in where you're continuously and where you want to get to is what you will assist you on this process. It's probably part of the reason why you're even in this webinar today. Let's move on. Now, when do you optimize? Remember, traders, there's a 6-step process. There's a 6-step process before you publish your trading system and scale it. 6-step process, publish and scale. Recently, we offered it as, we actually segregated it into 7 steps, actually. If you look at the last RTC live that we did. Phenomenal opportunity to meet us live again. I mean, some of you will still, maybe your mind is tricking you, your mind is still doubting, or should I go or not to Traders Basecamp, should I buy this TE kit or not? Doesn't matter. Come and see us live at RTCT Live. Because for some of you, you build up your resistance so high, your ego, your whatever limitations from the past is keeping you where you are at. That's why it's not allowing you to break through and to get to the next level. If you need more confidence, if you need more instigation, if you need more proof to assess our credibility, then come and interact with us. I mean, Simon Campbell has been very, very kind enough, you know, to offer that for you guys at such a very affordable price as well. RTCT Live, you know, to come there and then to interact with us. 3 sessions we'll be doing. 3 sessions we'll be doing, me and Rishi. So that'd be an awesome one to be there as well, right? Remember, we always want to see hungry and committed people. If you keep on asking me the question that it's been bugging you, we'll be there to answer it. Okay. Right now, 6-step process to publish and scale. The first thing what you need, very important, this strategy component or the crib sheet. Okay, the crib sheet is your rule sheet. Now I'm reiterating this one more time. Your crib sheet, very, very important. Very, very important. You must quantify. You must quantify all your rule set. You must quantify all your rule set. If you don't know how to quantify, you got a big gap in knowledge. Accept it. Absolutely know where you're at. The next part, you need to go and backtest that rules. Next, if the results are not to your favor, you need to go and optimize. The backtesting is for proof of concept. But one thing you must be very careful, very, very careful in the backtesting is 2 parts to that. 2 parts to that. One. You must not curve fit. You must be very careful not to curve fit. Second, you must always ask yourself. You must always ask yourself from the backtesting, however good it may be. First of all, do you have a large trade sample size? That's definitely one thing you got to ask yourself. Large trade sample size. Do you have a large trade sample size or not? That's the first question. Second thing you got to ask yourself. Why? Now this question is very important. If you have to write it down, write it down. Grab a piece of paper and a pen and write it down. This question is the question that Ray Dalio asks himself every day. And that's what makes him have the biggest hedge fund in the entire world. 160 billion with a B. 160 billion. And the question is, traders, the question is, why? Even though your backtesting might be good and awesome, and amazing results, you must continuously ask yourself, firstly, it must not be curve fitting. The next question you must ask yourself is, why must it continue to work? Why must it continue to work? Why must it continue to work? Very important. Very important. Okay. Very important. Let me just quickly check the position at the moment. We have kind of a setup on a long. The only thing we can do with that is above the MR as well. I think I'll place a position on this, but we might have to get off early. So let me just quickly do this. 1820 we got. 1825 is what I will put my entry at. Just give me a moment, trader. So 1825, 1.2825 is what I am looking at the moment. The low is 128.02. 128.02 and our take profit, let me see, 28.04 plus 70, 128.74, I'll just put it at. Okay, good. So now what do we have? 128.25, I'll just type this in. 128.25, 128.25. Let me see. Cable long 1.2825. Stop loss at, what do we have over here? Stop loss at 128.02. Target at 1.2874. Okay, good. So that's what we got at the moment. So I've sent that to you all. Great. So analyze that. Let's look into that, how it comes. This is a very typical stops to cash strategy, right? Stops to cash. All right. But traders, whatever that I've given you so far in the target rules, all simple basic rules. Okay, you got to go and do your research. If you just use those rules alone, they might not stand through time. Understand? Okay, you have to do your own research. You have to put your work. But if you want to shortcut your journey, you hang around the professionals, right? And the first thing is, there's different ways. You can read their books, you can look at their videos, you can look at, for example, like the T kit that we have done. It will tell you the most important fundamental tools that you need. Keep on listening to what we are telling you. You will get it, and we're here to serve. My only requirement is, traders, that you show the hunger and the commitment, and you can honestly say where you're at. Yeah, this is what we look for. Even these three things, this hunger, this commitment, people being truthful to where they're really at, these three things itself, I don't see it for many traders. On day one, we got a vigorous interview session with people, whether they qualify to get even to the next level on Traders Basecamp. And the reason, you know why? Because it's so important to hang around like-minded, committed, passionate people. Because even if one person, two people are not there, it's just a waste of my time, your time, and your money. And it's just going to disrupt us from getting to our goals in the fastest amount of time. Okay, good. I'm aware of time, and I guess I've drilled my point enough. So let's get back to the presentation. Right, 6-step process. So I've already told you optimization. Remember, this optimization point, we cannot assess anything. Yeah, we won't be able to assess anything at all. If your first step is not quantified. This whole thing becomes redundant. You will get nowhere. This is why some traders, even after 5-6 years, get to nowhere, can't push the equity curve up. And then they got to go back to their job, they cannot make money, they start to take this as a hobby, but they can't make it work, they got to go and find another job, do it as part-time, and they will not get anywhere because you know why? They're not getting serious about it. Take your life seriously, traders. You can turn this around, and when it happens, it's a beauty. I'm telling you from the truth standpoint. Great. Let's move on. Then, after you've done all of that steps, go and forward test it. If you want to, you can do a simulated version, do a demo account, build your confidence. After that, start forward testing anything, small life account up to £100,000. It can be $1,000, $2,000, $3,000, anything. But that amount that you choose must be, listen to this, very important. But the amount that you choose, you don't anyhow put a £10 account and start trading, okay? Don't put anyhow £100 account and start trading. The amount that you choose, must be more than your drawdown that you have found from your testing. Must be more than your maximum drawdown. And I would say, to be safe, to give some leeway for the future, must be at least more than 2 times your maximum drawdown. So your minimum account size that you put into the account must be at least more than 2 times your maximum drawdown. But do remember what I told you. You can never get any of these stats, and you can never be confident in any of these stats if you don't have the first part and if it's not quantified. Absolutely redundant. You get nowhere. I'm telling you the truth because I've been through it. I've suffered it. I felt the pain. And I know some of you are feeling it, but you're not have come to the true awareness, and you're not felt the pain hit every single cell of your body, because when it does, you will start running at such a speed that no one will be able to catch you, and you get towards your goal in no time at all. because your mind will start to ask the right questions, the quality questions to get you to where you want to get to. The next part, once you've done that, then traders, you can get to scale and reproduce. Okay, scale and reproduce. Of course, you know from this point already, SR, scale and reproduce. From this point, you already know that the 6-step process that I've just explained to you will take a long time if you just do it by yourself. If you want to go ahead and do it by yourself, it will take a very long time. I'm telling you from experience. This is why we have a group of elite traders. This is why we are very careful in selecting who comes on to join us. Because here, the primary thing is not about selling a course. The primary thing is finding good traders that can all shortcut and mutually work together, shortcut all our journey to get to where we want to get to, our financial goals. That's why the primary thing here is trading. Secondary thing then is training, education. You highly probably not see any educational company talk like this even, because the focus is very different. Okay, good. Now let's move on. Right, so we got the first interactive exercise right now, right? So we got a T-kit here at 50% discount, awesome value, incredible price, and you get, and that includes a free ticket to Traders Basecamp. Now let me tell you one thing, right? Because of the value of the information that we have and the stats that we have and the amount of traders and the quality of time that goes into this, sometimes even when I look at this offer, it seems a bit illogical for me. You're getting, for a 50% discount of a T-kit, you're having a free ticket Traders Basecamp. And of course, as most of you know, at the way that we are growing, that will not be very true for very long. We will not soon be including a free ticket to Traders Basecamp anymore, because the value is just going up, traders. You will already be able to understand how much of a value you're getting over here. First of all, nobody even does price level studies and quantification to the way that we do, and you know that. And you already have proven it in the webinar. When I ask you the questions, nobody can even answer it. In terms of price alone, I'm talking about. And nobody, until as far as I've seen, everybody has mentioned up to down day, down to up day. Not everybody, I mean about that's even like 10% of people who talk about up to down day and down to up day. That was Linda Bradford that I heard from. But none I've seen have explained in detail on how the up to down day forms and down to up day forms in terms of the range and putting it all together. Yeah. So can't stress enough, and you will be able to see this by yourself already, how much value there is going to be in spending with us 2 full days at Traders Basecamp. Let's go into the questions right now and see who are the lucky people who are going to get into Traders Basecamp. Right. Okay. Are you all ready? If you're ready, just type in yes for the questions, and then I will flash them across the screen. Okay, cool. So everyone is saying all yes. Okay, so we're all ready. So let's go for it. Question is, let's go. What are the 3 parts to the trading methodology? I explained this yesterday and today as well. And how many steps are there to publishing a strategy, which I just taught you all. 2 questions. See who gets it right first. Okay, I'm seeing some of you already typing in the answers already. Still yet to find the first right answer. Still yet to find the first right answer. Okay, coming in. I'm seeing this. All right. Okay, I will let you guys type in your answers, and once I see the first right answer, I will award the prize to that prize winner. Okay, let's move on. Okay, next, what to optimize? Okay, that's the next question you ask. What to optimize? The first thing that you need to optimize is to look into your stats, is your reliability. Now, the reliability basically means how many times does your trade win? How many times does your trade win as opposed to losses? How many times does your trade win as opposed to losses? Okay, is what we are looking at. Right, so this can be, let's say out of 100 trades, right? 100 trades, let's say, you got 70 trades which are profitable, that are won. Then that would be a 70% win rate. Okay. If 40 trades only won, then that's a 40% reliability. That's your first test that you must know. The second one that you must know is your actual reward to risk ratio. Your actual reward to risk ratio. Remember, the important point over here is that it's called actual. Actual. Okay, actual. It's not expected. It's not called expected, it's actual. So in terms of a profit to loss ratio, how much are you really making? Is it 1.2 to 1, 1.5 to 1? Because your expected can be 3 to 1, but actually, in terms of your results, black and white, how much are you making it on a average? Okay, that's what I'm asking. And this one then is pretty much similar. Average winner to average loss. Average winner to average loss. And then what we're then asking is peak to valley drawdown. This is important as well because it tells you about your drawdown. Okay, very important. Okay, great. So that's to do that. Let's move on. How to optimize now? As I said, backtesting, of course. Remember, you should not curve fit. Very important not to curve fit. And the second thing I did mention over here is that also you must have a large sample size. Okay, so large sample size. At least bare minimum, have at least 100 trades to test. You at least more or less know. But ideally, you want to test it at least over 1,000 trades. Okay, and that you got to do it over with a programmer, or test it over a 3-year period manually if you have to in the beginning. Next, forward testing. Now, in the forward testing, not necessarily, most of the time, the back testing will sustain itself, as most of you know. Then what you got to do is find out from the market feedback what we're saying, market feedback, why it is doing what it's doing, because you'll not be able to account for everything that in the first place, when you came up with all the rules in your strategy component. I'm telling you all this because from experience, because I run through the whole process in Morning Glory, our intraday trading strategy, which is what you're seeing today. It's an upgrade version of Stops to Cash. Stops to Cash is a very, very good starting point to start from. Okay. The next thing then, what you're then looking at is your entries, stop loss, and exit. After all the stats review, you can then look at the entry, stop loss, and exit, see where you're losing the money, and then start to alter those parameters. But you can only have the confidence to keep on optimizing and looking what to improve only if you are strong with your concept. Also, you lose the confidence and you start to think, is this strategy really working or not? And you won't bother mixing and patching the parameters anymore. It's quite a lot of stuff to do, traders. That's why I always say to shortcut the journey, hang around the professionals. Optimization, case studies, case study, Morning Glory 1. Now, before I carry on, any questions at all, please punch into the chat box. Just pause for 1-2 minutes to see if there's any questions or not. Okay, I guess all of you should be able to hear me right now. Okay, so let me see. Right, so I've gone through this. Okay, so good. So I think just now the question that I was answering, so let me go through that again very quickly, just to have time as well. Now, the point is, what I'm saying is, you're asking how much backtesting, so we can use either a time period of 3 years, okay, but within 3 years at least you must hit the sample size. You must hit the sample size of at least 100, right? But ideally you really want 250 at least, 250 at least, and in a perfect scenario you want at least 1,000 trades, but this part you can only get to with a programmer. But what I would suggest is, traders, don't go and invest in a programmer immediately. Check how your backtesting comes out to be first over a sample of 100 minimum, ideally 250 trades, and if there's any worth doing it, then go and spend on a programmer and maximize your 1,000 trades. Understand? Also, there's no point. But also another thing you must ask yourself also is that the questions that you ask in your research before you even program the strategy must be very strong to build the edge. There's so many parts to it, and the sad thing is most traders won't even know where to start or how to ask the questions. The questions are very critical. Okay, right, great. So I believe that answers your question there, Peter. How much backtesting is necessary. So let's resume now into the next case study 1, right? Case study 1, Morning Glory. Now I will show you what we have done in terms of this. So you can see over here what we have in Morning Glory over here is that it's an intraday, yeah? It's an intraday trading strategy. It makes about 59.21%, and on a £100,000 account, it's £59,210. You see, just by looking at this also, you can see that immediately what I always focus on is the loss cluster. The maximum drawdown over here has been minus 6.88. Okay, minus 6.88 is what our maximum drawdown has been. And you can see also the breakdown month by month. Now, this is not only important. Your drawdown then is very important to go through month by month as well. Okay, month by month as well, all the trades. Look at all the trades that we have logged in manually, right, on the crib sheet that we have formulated. And the crib sheet will look something like this, right? Yesterday I did show you all, you see. Yesterday I showed you all, let me see. Stop the cash. The crib sheet will look something like this. Okay, the crib sheet will look something like this, right? Where you got to define all your rules for entry, stop loss, and target. Okay, right now. Yes, very good, Selwyn. You just very nice, very aware. That's very good. I really like that you asked where is your August. That we don't trade August. We don't take August in consideration because for two things. One, usually there's low volatility in August. Second is that we take a month off as well. Okay, take some time to recharge and rewire ourselves back. So that's what we do here. So we didn't include August in the testing. Now you can see January, then February. If you want, you must also go into deeper analysis of the drawdown and also go into maximum trade by trade drawdown as well. It's very important. But remember, you can do nothing of this if your rules are not quantified and if your strategy component has not been designed according to the concept and objective. So we did this for every month, as you can see, right? So we can see over here, like June made 10.04%, then July, then that hit a drawdown minus 2.87 and all that, or so forth. Yeah. So that's what we do have over here. In total, it made about 59.21%, but this will not probably stand true. This was really a good year for 2015-16, right? 59.21%. Now the next thing is I want to bring to your attention is after you have done that month by month, yeah, month by month, then you also must be able to analyze all the stats that I'm just telling you, all the reliability and the average profit, average loss, average net profit, and everything, yeah. And then when we put it all together here, you can see, right, all the stats are put together month by month. You see what I told you, at least a bare minimum of 250 trades, at least I've seen, because this is intraday, more frequency. Just over 1 year, I can rake up a high amount of number of trades. 283 trades is what we have. At least more than 250, what I told you, isn't it? It will give you more or less a good idea how the strategy performs. But especially with intraday, you actually need more. And this is why we're in the process of formulating all of this and giving it to a programmer, okay, and testing it even more, higher amount of trades. Okay, that's what we are looking to do at the moment. Now let me go through this just very quickly. I just want to make this the same format. Just give me just 1 minute. Yeah, so there you go. So let me just do this across the whole. I just like things to be consistent. Right, okay, great. So we got this now. Let's look through this, right? So I've added up all the trades for each month. That gives me a total sample, number of winning trades, and then number of losing trades. So you remember what I told you, the reliability, it's not even 50%, it's less than 44.52%. That means for this strategy to win now, each winning trade must make more than the losses. Then this is a total profit, just total profits all by itself. Total losses, this minus this gives you net profit, right? Over here 59.21%. And then finally the average profits, which is total profits divided by number of winning trades, gives me that. Average loss, average net profit, right? Average net profit is a different calculation altogether. And then after that, I'm doing average profit loss ratio. Remember, look at that, 2.09. This is why my strategy is finally winning, because even though I got low reliability, but each winner makes 2 times, a bit more than 2 times the average loss. Finally, then you have your R multiple expectancy. Okay. So no, actually not. You can't really get that. Some will do, like TradeStation and all that would give you this kind of level of depth of analysis. But there's one reason why we usually track it ourselves as well, because of the 2 curves that you need to get out of your strategy, right? The second case study is smart money, but I've given you an idea already how it's already done. I'll just brush through this because I'm just aware of time at the moment. Smart money journal, remember the smart money, I would like to make your attention here is end of day trading strategy. Place it at the end of the day, just like the 80% RB, right? 19.41. We go through all these fundamental concepts in a Trader's Essential Kit, right? Tells you all the tools to build up this strategy optimization, all that, and the trade journals that you need to use to get to this point, and all the stats that I've just shown you, all these formulas inside the trade journal to calculate what I just shown you just now, all month by month, is all inside the Trader's Essential Kit. Okay, it's all inside the Trader's Essential Kit. Good. So that's the smart money. Let me just quickly go through that. So as I told you, that's an end of day strategy. £10 a pip makes you £21,000. 19.41% on a percentage risk management. Very good, because even property investments only make about 5 to 8%, right, a year. And yeah, finally we got all the trade by trade breakdown as well over here. But one thing I must mention is sometimes the drawdown comes in quite a large cluster. As you can see, last year we had a drawdown of minus 4.85%, and it came down 5 consecutive trades. Then it broke that with a large win at 3.13, 2.58. Then it overrode all the losses, and then we got a big run over here, another big run over here. So you must be familiar with how your strategy performs as well. Okay, very critical, very critical. Okay, good. I think that's that to do with that. Finally, I must mention, because Selvan did say you can get all of that stats that I showed you from a broker platform. Not all of the broker platforms will do for you. TradeStation will do for you even to much bigger detail. But one thing that none of the broker platforms can do for you is to help you analyze the profit gap. The profit gap. None of them will be able to analyze for you this. Who in this webinar, out of all the attendees that we have over here, who in this webinar knows what the profit gap means? What the profit gap means? Type into the chat box if you know what the profit gap means. Yeah, Selvan says no. Few others, yeah, no. Okay, some beginners. Most of you saying yes. Okay, so what does it mean then? Anyone who has just said, I think only like 2% of you guys are saying yes over here. What does it mean to you? What does the profit gap mean? Yeah, I think some of you, 1% of you who have typed it in, I think because we mentioned this before, or you've seen some of our webinars, is between the actual results you've got, which is through your manual execution, and through the system results. What should have happened according to your rules? Because your emotions will get to you sometimes. Sometimes you go on holiday. Sometimes life hits you. You're not able to place the trades. How much then is the system then making? So you must always have some of the usual question I usually get is that, but what if it's all machine? What if it's all machine orientated? What if the computer was all computerized? Or is it all automated now, right? Then do we really have an actual curve? Yes, of course you can, because sometimes you get wrong fills, you get slippage, you know, that's so if you're using an automated system, then that will become your actual curve, and the system curve is what it should have been without slippages. So without slippages, right? Without the gaps, right? Gaps, probably you have to include the system, whatever it's entering in. Sometimes maybe if you get electrical failure or computer failure, computer shuts down. So all that is going to be accounted for by the system curve. What should have been done? What should have been done? Okay. Sometimes the automation can go haywire, it can enter you the wrong place, the coding has not been done correctly, then that is also not meant, it's meant to be in your actual but not in your system. So you must always have these two curves, and especially if you're using automated, which is automated system, which will give you your actual curve, and then your system curve can be measured to your backtesting curve as well. How much well is your actual curve performing to your backtesting curve? This is a very good measurement as well. Okay, so basically the system curve is what should have happened if you were to follow it according exactly to your rules that you have. Great. Now then you get your two curves, which is system curve and the cash curve. The gap between that, as I mentioned, the gap between that is what we call the profit gap, and you want to minimize that as much as possible. As your intuition grows, as your conscious competence grows, as your unconscious competence grows, this gap will start to reduce. Okay, let's move on. Great. Now next, for the interactive exercise, I'm just going to brush through. How many of you do want to participate in this? Let's say, let's see yes. If there's a good level of interest, I'll show it to you. If there's not any passion to let's get this right and see us live, then there's no point. I mean, even me showing the questions. So how many of you want to participate and win the prize? Let's see how many of you really want to participate and really get this and see us live. Okay, I'm seeing a considerable amount of yeses. Okay, let's go for it. And if I get the answer, then we will give you all the prize. So here we go. Here is the questions. Is smart money an end of day or intraday strategy? And what are the two types of curves you need to review? First person to get it right will win the prize. 50% discount on T-Ticket, and which includes a free ticket to come and see us live at Traders Basecamp. Okay, I'm seeing you all typing in all the answers in. First person to get it right will then get the answer. Okay. Okay, I believe that we have a winner. So Selvan, you have won the prize. So just send your details to our team. Okay, send your contact details to our team, and send your contact details, which is just your email address and your phone number. Okay, that's all. Right. Okay. So so that's to do with that, and I guess that with that brings us to the end of our presentation. Okay, so and then finally, I just want to say Traders Essential Kit. I think Rishi has already gone through this. Those of you who want to purchase this, it gives you all the 7 tools, which is important for this 3-step methodology that we just spoke about. It will also include a 50% discount TB ticket as well. This is at the full price, okay? £97 plus VAT. For prize winners, it's been given as an incredible offer. Okay, so well done for all prize winners who have won the prize. Okay, who've won the prize. Okay, so I guess that's pretty much that from me. I'll take out any questions at the moment, and I think just for the next 5 minutes, any questions also you want to ask me about psychology as well, which is very, very important. Very, very important. You can ask me that as well. Okay. Okay, for those of you who won the prizes, I think some of you, I think my team is telling me that it's been hard to get a hold of you guys if you haven't sent your details through. It's totally up to you guys. I think I just heard from the guys that Marvino, right? Marvino, you won the prize yesterday. I've seen that you're really, very dedicated, very eager always. You've not sent us your contact details yet, your email and your mobile number. But it's totally up to you. I mean, if you want to come and see us live, if you really see valuable, come. I mean, if you don't, then it's totally fine as well. Nothing for us to really to bug you on. Okay, it's totally up to you. But great stuff on winning it. I see a lot of eagerness and commitment. So if you want to come, it's totally up to you. You can send us the details, and our team can give you all the full details. We just need your email address and contact number. And for any other prize winners who will not send it to us yet, you can always send it to us. Okay. How do we send it? Don't worry, Selvan, they'll be contacting you. The team will be contacting you. Okay. Raj, you have also sent us your details as well. Do you want us to give you full details of where the Traders Basecamp is? Anyway, I think our team will contact you on any other questions that you may have regarding to the T-Kit or the Traders Basecamp. Any other questions in terms of trading and psychology? I told you already the most important thing that you all have to realize today, that you have to get really, really honest with yourself where you're really at. You see, traders, in the 20,000 traders that we've come across in the 10 years of our trading experience, what I can tell you is that most traders, what really stops them is their ego. Their ego of just blinding themselves that they're around the corner to crack it, when their gap in knowledge is so big and they don't want to even spend a single pound to increase their level of knowledge and then turning the equity curve around. But you know, knowing what the industry is at today, especially most people just being educational and just trading companies, I don't blame what has become of this industry and how traders are thinking of it as today. Because the common mindset has become such that, oh, they just want to just sell me a course. And then that has become a big block to an individual trader to taking the next step and to filling their gap in knowledge. They think that they can do it all by themselves right now. So then the only thing you can tell yourself is that understand and accept that what has happened to this industry. The second thing is ask yourself the right question to get you moving forward is then, okay, then who are the good guys out there? Who are the real professionals? How do I assess their credibility is what you got to ask yourself. Ask the questions which will move you forward. Don't ask the questions which will limit you and keep you where you are at. I can tell you for an absolute fact that if we, myself, in my own personal experience, if I didn't hang around the professionals, I wouldn't be where I am today. Very important, traders. Very, very important. Yeah. Is there any point in using fibs? Of course there is point. Of course there's a point, depending on how you use it. Fib is a very good tool, but depending on how you use it. But a very good, very, very important point for using fibs is you must have swing high and swing low level. Because think about it, right? Think about it, traders, yeah? Let me pull up a daily chart. If you don't have your swing high, swing low level, how are you going to find your low and high point to draw the fib from? You cannot. How can you? It's all subjectivity. When it's subjectivity, what happens? You cannot scale and reproduce your system. You cannot. You just can't. Swing highs, swing lows. I can tell you one thing. If you want to take away anything from this webinar, I can tell you one thing that, especially for swing trading and for any other analysis as well, swing high and swing lows are so critically important. Very critically important. Swing high and swing low levels are very critically important. Okay. That's why the smart money indicator is very highly precious. I'm not just telling you just because I'm very biased out of it, because I've understood and appreciated the value of it. Okay. Okay. Any other questions? And also another thing, traders, is that we really care about, we truly care about people who are really hungry and committed to making this work. We really care about them. And if there's any roadblock that you've come to, if there's any resistance point that you've come to that you don't know how to overcome, we are here to help. Send in your questions. Book in a coaching session, right? Book in a coaching session with our traders. We're more than happy to help. Okay. Okay. Great presentations and all that. Most people usually say that because they haven't seen anything like this. You want to see the videos, right, Peter? That's not in our remit, and you have to ask Simon about that. Okay, the next thing is what best broker, what best software. You see, I won't be actually able to answer that all for you, but I can tell you that because we don't be biased towards any broker at all over here. But what we recommend in terms of analyzing spreads and all that, right? And analyzing spreads and everything. One thing you got to consider in terms of brokers is the spreads, right? Is how big is their spreads and how good is their fills. These two things are very important. When you click the buy button, how many times do they give you the price that you ask for? Okay, if you ask for 128.23 right now, are they going to give it to you at 128.30? Or they're going to give you at plus the spread 128.25. That's what you got to ask yourself. If that fill is good and the spread is tight, then I would say that's a good broker. Do your own research on that. All right. What best software? I mean, if you know what you're looking for, it doesn't matter. Even a basic one like a MetaTrader will make you money. Right? All these questions will be answering at Traders Basecamp. If you're a novice, you're a beginner, just starting off, we teach all that at Traders Basecamp as well. If you are not in the country, if you're not local, if you're away, then you can always purchase any of our digital copies, which we have readily in hand. Anything that you want to know about how you want to engage with us, more than happy to type in all your email address and number into the chat box. Our team will then get in contact with you. Okay, that's that. Any last questions? We are 10 minutes to 11. And also another thing, also I must mention for those of you who have not been here for in the last 2-3 days, if you want to know how we are going to manage this current trade if it triggers, if you want to know how we are going to manage this trade if it triggers, you can join our WhatsApp group. Okay, you can join our WhatsApp group, and when you join our WhatsApp group, your details won't be shared with anyone else, right? Because it's a broadcast group, so anybody else can't see your number. So if you don't know how this trade is going to be managed, join our WhatsApp group. Not only that, in our WhatsApp group, you also get updates from time to time on what trades we are doing, what trades we have taken, and there's lots of educational material there as well. Okay, join our WhatsApp group to see how we manage the trade today, and also for our trade updates moving forward. Okay, which serve as Okay, great. So I've sent it all to you all. So that's all up to you now. The ball is in your court, Ben. Do not worry. I mean, just because you give us your number for the WhatsApp group, we're definitely not going to be one of those people who are just going to call you every single time and telling you, you know what, buy this, buy and sell you this and sell you that. If you're not concerned and bothered at all, really, to be honest, if you show me the interest, and if you need a bit of encouragement, if you got valid questions to ask, yes, we'll be there to serve. We will call you. We will engage with you. Okay. Just put in your number. Just put in your number, Tosin, into this chat box, and our guys will call you. Not call you, just add you to the WhatsApp group immediately, okay? Or they'll email you as well. So just give us your number, your WhatsApp number. If you have a WhatsApp group, if you have a WhatsApp, then just send us your WhatsApp number. If you don't have WhatsApp, then you just have to download it. All right, okay. Okay, yeah, so some of you already send us your number. So send us your mobile number to join our WhatsApp group. And if you can send us your email address as well, so that we can also send you all the details on if you don't have WhatsApp, then what you need to do as well. If you can send us your email address, so like people like all the others will send it to us, like Peter, Selvan, Anthony, Raj, and all that. If you send us your email address as well, then we can also send you full details on how to join the WhatsApp group and all that. Okay, send us your email as well if you're interested in engaging with us. Okay. Okay, great, guys, great. Okay, I think that's pretty much that from me. From today, pretty much all from us for today. I'm going to pass it on to Rishi. All I do want to say here is that our main thing in this webinars is that we want to be true to ourselves, that we have served to our utmost best. And that's all I can do. Finally, the choice, how you want to take this forward, is all totally up to you all. Okay? Right? And we do apologize if we said anything that has offended you all or whatsoever, but do always remember that anything that I said, I'm very clear of my own thoughts only, that it was said out of pure intention to only move you forward, to make you realize the truth of really where you really are at and where you want to get to. Because when that happens, the gap will start to fill itself up by itself automatically. Okay, it's been an awesome opportunity serving you all. And with that, I will then pass it now on to Rishi to wrap up everything.
Thanks very much for that. That is superb. Okay, couple of questions coming in with regards to some links and things like that. So some of you have submitted your numbers for our WhatsApp broadcast list, which is great. So Milan has already dropped into the box what you need to do by way of being on that broadcast list. So that's great. Thank you for that, Milan. Thank you for those of you that have sent across the WhatsApp numbers for you to gain those updates. I noticed that some people are asking in regards to links for Days of Live Trading. That's not in our remit, so that Simon Campbell will send you across details of where the recordings can be found. So thank you very much for that. From my end, I just want to say that it's been a great honor working with you all in this last couple of days. We are still going to be running the end of day live trading room for the last day for you all to join with no cost whatsoever. So you can see, I want to just say that at this point, right where we are now, we actually have, it's early in the day and it can all change very easily, but at this point in time, we do actually have an 80% RB set up on this Euro US dollar. So we're looking for one more key factor to confirm itself. And I imagine that will happen later on into the day. But at this point, exactly where we are now, there is an 80% RB set up on this Euro US dollar if it stays this way. and we'll be analyzing that and placing a live order in the live trading room, if applicable, this evening. So that live trading room will be held at 9 p.m. And if you want to participate in that, I've already told you, absolutely fine to do so. All you need to do really is just click onto our website. So Milind will paste the details of the website into the chat box. You put your first name and your email address into this blue box just here and click the Get Started button, and that will allow you to gain a 3-day trial, into our live trading room, where you can actually watch us taking those trade setups for the 80% RB. So that's pretty much it from my end. The only other thing I want to say is that the Traders Essentials kit, I already mentioned earlier today. I think there are a couple of new people that have joined since I actually talked this through. So I just want to very, very quickly just re-mention that. And that is the essential set of cool tools that we put together, 7 essential tools every single trader needs for success. We've compiled into one place onto this smart USB key. Will be shipped anywhere in the world, and I've already shown you the profit expansion testing spreadsheet that I put together with the team, which actually logged all the profit expansion trades, and you can get access to that spreadsheet as well as the stops to cash trading strategy and presentation with the first 10 purchases of the T-kit. There have all been multiple purchases today, and so there are only a few of these left, and these bonuses. After 10 purchases, we won't be handing out these bonuses anymore, and this is only for this live trading week as well, this specific combination. So it is £97 plus VAT. If you want to buy that, all you do is click onto the Trade Essentials website, which Milind has dropped into the chat box now. If you press onto that, you'll have the ability to be able to make the purchase by clicking onto the blue buttons just there on the website. That's pretty much it from me. I'd like to once again just say thank you for the opportunity to serve in this way. I'll pass back to Simon Campbell, and I'll do that now.
Okay, Rishi, that's great. Thank you. I'm here. That brings us to the end, I suppose, of the big 3 days. You'll be back with us tomorrow, 10 o'clock for the Round the Clock Trader event. So we'll look forward to that as well. And also the recordings. I've just posted the link into the chat box where the recordings are posted on our YouTube page. So you can go and download these recordings. Obviously today's not there yet, but it will be in due course. So thank you very much, and I think we'll close it there, shall we?
Fantastic. We're very happy with that, and thank you again for the opportunity there, Simon.
Pleasure, Rishi. I'll speak to you soon again. Okay, thanks everybody, and look forward to seeing you again soon.